Hi-ho, everyone, and welcome aboard. Thanks for joining me for Trading Buddies on this Thursday, the whatever it is, 14th of September 2023. Nice to see some fresh faces in the room. Thank you for joining us. You've probably got absolutely no idea what goes on in the show. Well, primarily it's all about you guys. What is in your mind? If you've got any questions, then fantastic. We're happy to answer them. If you've got any ideas as to whether you want to trade or what you want to trade today or next week or next month or last week or whatever, if you've got some charts you want to share, by all means do that. But primarily it is all about sharing. And those people who join us in the room each day are very, very good at sharing. And we have a wonderful lot of people who join us and share their ideas. And two of us, Ash and myself, are here to do exactly that. We'll be telling you what we think. And if you've got any questions around that, happy days. If you've got some ideas of your own, then happy days as well. Don't be frightened to put something in the chat. You can come online, you can come on camera, you can come on mic. There's nothing barred here. It's all about you sharing your stuff with us and we sharing our stuff with you. First thing I share each and every day that we trade is the gold chart on the 1 hour. And the reason for this is we are trialing a breakout system where, come London Open, we attempt to catch the first move out of the Asia range. And the Asia range, of course, starts at the second bar of the day. So what we do is isolate the low of that range, and including the current bar. So we've got a low here at present. There's where Asia session starts. So we've got a high up here at present. So we isolate those two areas. And that's our range. So what we're attempting to do is find a way of trading that profitably, the break of that range. Range is pretty much 2-day range, as I see it. We add a few filters to that. Currently, what we're trying to do is take profit at a pivot level. In this case, if we went long here, we've got very little room to DR1 and very little room to yesterday's high. If we were to go short here, we've got a reasonable amount of room to DS1, so not quite a one-to-one trade that would be, but yesterday's low is somewhat onerous. So the breakout of this range is problematic because we've got resistance levels and we've got support levels dead ahead. So that's one of the filters, if not the main filter that I use to decide whether I want to take this breakout or not. And the answer to me is, although the range is quite okay, the potential rewards are really not okay and don't warrant the risk that I would have to take. See, my thesis is that if we hit this level here, we're probably going to bounce off it. Whether it goes back and beyond the daily pivot, of course, is conjecture. And if we go long and we hit the DR1 in concert with yesterday's high, then potentially we're going to bounce off it and go short. Again, whether it comes back through the daily pivot or not is purely speculation. That's the kind of thing that we're looking for, right? But you can see that was unimpeded. Maybe that low there was a problematic, but you'll probably have it your profit in the bank before you got there. And going long at that point, depending on where the range was, it was probably there. Weekly pivot would have been an issue. So taking those things into consideration, which I am today, I would go Paul P. I would be very, very hesitant to trade that breakout. Adding to that, we're very near to the entry on the downside. And when that's the case, especially coming into a session where you tend to get a movement one way and then the other, I would be very, very hesitant to place an order underneath that bar. So we are now there. And I'm not placing the trade. So I'm not going to trade the breakout today because of the nearness or proximity to our support and resistance areas. Otherwise, let me explain to those of you who are here for the first time. And once again, welcome to you. It's great to have you on board. This is the system that we use. So the high of the Asia range, the low of the Asia range is the range. And for that reason, we tend to look for a break to the high side or a break to the downside. At the moment, we're using the pivot like DR2 here, DS1 here would be our limit. So we'd go in, there's our risk, entry here, stop loss here for the long, target here, entry here, stop loss here for the short, and target here. Once one is triggered, we would cancel the other. That's how it works. So very, very simple. But the filters that I add are primarily with support and resistance, and that's why I wouldn't be trading this today. Okay, so let's move on. Now, just updating a couple of things for those of you who have been in the show for a while. We traded CAD Swissy way back here last week on Monday, placed that order, I do believe, and finally we triggered that on Tuesday or Wednesday of last week. TP1 was just about here, as I recall, and that has now been taken. I did move my stops to entry when I missed TP1 by 1 pip on this day here, which was on Tuesday. That's my rule. If I miss TP1 by 1 pip, I move my stop to entry immediately, which I did yesterday morning. However, yesterday evening, we hit our TP1 and I moved my stop loss back into what really is relative safety, but where I can trade this for free. So I've taken 1/3 of my position off at TP1 and I've moved my stop loss from where it was to 1/3 of that position. So essentially, if I get stopped out here, it will be a break-even trade. I'm not counting on that, mind you, and I'm trailing my stop every 2 buyer bars. I don't expect that we're going to get a buyer bar today. I think we're going to probably get some consolidation, having just about reached this resistance area. So consolidation or even pullback to the bottom of that channel, which really coincides with around about our entry level, where you can see we've had support here, resistance here, resistance here. So I'm expecting a pullback to that area today. And that's fine, as long as it doesn't pull back to here. That's not fine. If that were to be the case, I'd simply look for another entry. But at this point in time, CAD Swiss looking particularly buoyant. 5 days in a row, if it were to give us another high today. The other order or trade was pound CAD short. I've actually closed this position because of the area we have reached. Didn't really want to put both of those CAD trades without taking some profit. So I've taken profit on pound CAD because it's at a support level, and I'll count CAD Swiss going because it's only at a weak support level. This is a fairly strong support level, as you can see. So I'm anticipating that will come back inside this channel and potentially pull back to at least this area here, previous month's monthly pivot, but even more so this confluence area of weekly pivot, trade line, and previous resistance, previous support. So I'm thinking pull back to there. I may even look to trade that if and when we come back inside that channel. Be looking for a reversal followed by a higher low to trade that back to that area. That's my trades up to date. Now, about today, what am I thinking? Well, my thesis for the week was all around the dollar index. And the dollar index is kind of doing what I don't want it to do, and that's setting up for a short. Why? Well, because this level here, this previous, I'll get it out, resistance area coincides with the top of this ascending channel. We have broken that area. We've consolidated above that area. We've pulled back below that area. Or have we, and that's the question mark I have, is that level going to offer support? In my world, yes, it probably will. But also, I like to trade false breakouts. And this looks very much like one of those. This being the dollar index, if you go short the dollar index, you're going to pay a lot in swaps. If you're trading on a daily chart, of course, and I'd probably be in this for weeks. So I really don't want to entertain that. So I flip that on its head and go to something like the euro, where obviously if I want to short the dollar index, I want to buy the euro. I don't see any reason to buy the euro at the moment, to be fair. In fact, this looks pretty much like a bear flag to me, and we've got a level below us here. So I expect this to break to the downside again, which takes me back to the dollar index and gives me that, okay, if this isn't a false break of that area there, then is it a break and retest of the previous resistance level? And I'm going to go with that. I'm actually going to go with that. And why? Well, because I've got a bias long, don't forget. I'm thinking that we're headed towards the top of this range. And I found nothing to change my mind on that. What I did think would happen this week would be that we'd see the top of that range early in the week and then pull back off it, giving us a negative week, which is sorely needed because we've had 8 weeks in a row of bullish price activity. It looks like, the way I'm weighing things up, that we may be in for a 9th, but there are inflation figures out today, if I'm not wrong, or have we already got those? Can't remember. I haven't
there
been
are some, mate. Inflation was the kind of CPI numbers were yesterday, but we do have some PPI. But the big one is the retail sales numbers.
Okay. So we're probably at the whim of whatever that number is. But my thesis for the week may well be, I may still be right. We could still hit here. And
we have an ECB meeting.
Okay, that's not going to affect the dollar index, I wouldn't think, but it will affect the euro, of course. This could still happen. So I'm still bullish the dollar, despite my thesis of the week that we get a negative candle. It could still happen if the figure drives price up to this level, and then for whatever reason we pull back off it. That could still be a negative candle. And that's where I'd be looking for a lower high to trade this short. So the thesis, whilst it doesn't look like it's going to play out at this point, which was up to here, look for a lower high next week and back down towards there. At this stage, it doesn't look like it's going to play out, but I'm still there. Please give me my analysis on Euro Aussie. Will do. Bouncing off support for a while. Yep, cool. I don't have a lot more except to say that I looked at Aussie dollar when I was of the thought process that the dollar index would come down. Remember, I was talking about this false break, which I've now overruled by the break and retest of the horizontal level. So when I was of that mindset, I was thinking this was exactly a replica, which it is, of what I've just spoken about. And this little bar here, to me, was tradable yesterday, and I did trade it. I put an order above it, put a stop loss below the weekly pivot here. That, of course, expired. And today, it looks as though it wants to have a look at these highs. I've just given you the flip version of that. So I'm now no longer thinking that is going long. And I think that's probably backed up. I think I did look at the CPI figures. They were pretty okay, weren't they? Suggesting that there may still be a little bit more for the Fed to do.
Maybe, yeah. It was they were a little bit Well, CPI came in at 3.7% so they actually sort of climbed a little bit, I think, from 3.6. So yeah, possibly. I mean, it's just one of those things that the Fed could still maybe pause and see if there is anything left in the kind of after effects, because it takes a little while for monetary policy to set through the economy. So they may still pause off the back of those figures. That they weren't really strong, kind of at 3.7. They're still way over 2%, but there wasn't a huge kind of like, a big drop. What it kind of suggests is that there may well be more to do, but maybe more in the form of sticking with it rather than raising again. So I think that they'll probably stick with it next time out, and then maybe have another look at the numbers and see what they can surmise from what happens from here on in. There were some other numbers out yesterday actually that were showing that it was maybe sort of like a little bit of a cooling inflation. Oh, I have a trade. Hold on.
Okay, we'll go with the trade. Thank you, Danny. Of my mindset, I liked it.
Need to do. Oh, go for what I'm doing here. Sell that.
You need some time?
Give me a moment, mate, and then I'll be with you.
No problem. All right, so I've flipped my position on this, and I'm now thinking dollar strength, or for that matter, everything against the dollar weakness. I don't think it's strong in either way, but I don't think I want to buy anything against the dollar at the moment, is probably what I'm saying. So Aussie dollar goes into that category. Let's talk about gold. There's that break now of the range. Let's see if that proves to be false. We shall see. Gold, to my mind, was a sell here. And exactly the same applies, right? Actually, that bar there was probably better. But had you traded that bar, you may well have got beaten, although you'd had your stop loss up here. Let me explain to you guys who are here for the first time. I like to trade false breakouts, and you've already heard me speak about them 2 or 3 times. So I better explain what I'm talking about. When I see a level broken, and my levels can be just about anything, frankly, they can be a horizontal level, they can be a trend line, they can be a triangle, a rectangle, whatever you want. So in this case, we had a channel, but more importantly, a trend line. The trend line going down here was broken at a horizontal level, and price consolidated at that level, which is important. Means that the market has time to work out exactly what's going to happen next. Then they sold back underneath the trend line, and then retested it with either that one, or even that one. The preference is for the first bar after the break to come back and retest that line. At that point, that's where I want to enter short. A bit problematic. What is that line there, for goodness sake? That's what it is. Okay, it's been support, it's been resistance. So tough to trade through. And that's what made that position very, very difficult to enter. Smaller time frame required, because if you traded that bar there, there's your risk. There's your reward right there. And where do you put your risk? You pretty much got to put your risk above the monthly pivot, as I said. So on that basis, had you played that particular scenario, you would have risked $16 and got $2.30 before you had to think very seriously about whether you wanted to maintain the rage. As it turns out, we paused on that line and now have gone through it. So target area right now would have to be, if you are in this short, you'd want to be considering somewhere around about here, I would imagine, about 1900 level, as it turns out. So there's not that much left to gain here, I don't believe, before we get a retracement. That plays into what I was talking about with the dollar index as well. The dollar index has got a little bit of room upside room, but it's not a whole lot. So is there a risk to reward trade that I would like to take on anything with the dollar in it at the moment? Answer is probably no. With the CAD positions, as I said, in the miners, not so much CAD Swiss, I think that's going fine, but pound CAD is definitely at a support level, which is why I've actually closed the trade. At this point in time, that may well be a poor decision, but we'll see. I still think we're going to get a bounce here at some stage. But the question for Ash, I suppose, when he sorted his trade out, is going to be...
I think I'm okay, mate. I thought I had something, but it didn't quite shape up. I was on my line, but it's continued through it, so I'm okay now. Cool.
So the question I'm going to have for you is, what on earth can give the pound some strength? But I'll answer Danny's questions first, and I'll probably have Danny answered your question already. But most definitely, yes. If the dollar does go to that area that I spoke about, which is the top of the range here, up here around about 105.70 or something like that. So where are we? About a whole figure, really, right up to there. So that's not insubstantial, I suppose. Yes, gold could most certainly come down, and I expect that will be the case. And there's as I said, my level. 1900 looks to be somewhere that gold is going to test in the next day or so. So yes, most definitely. Right, mate. Why would the pound rally? And should I put out a pound CAD at this support level?
Well, I don't think that there's any major reason for the pound to rally, except for the inflation data. You know, when I kind of look at the UK economy, there is incidental and surveys and actually hard sort of economic data, which just suggests that the UK is in big trouble. But the inflation rate is so high; it's still so much higher than everywhere else. That the Bank of England have got a lot of work to do. But it's interesting, you know. I'm reading lots and lots of stories right now about people just not able to make their mortgage payments, not able to make their rental payments, credit card payments, and you can kind of get this. There is this sense in the UK that the economy is probably already broken. And it's just what is going to just tip it, and that's proving to be sort of one of the things for me with this timing, because actually I'm looking at shorting the Nasdaq, which I don't particularly like to do, and shorting the FTSE.
You get a negative GDP print the other day. Was that right? Did I see that?
A weak GDP print, a negative 0.5% over month on month from the UK. So, you know, I think there's enough evidence to suggest that the UK is getting drawn into this global economic downturn. The United States hasn't yet followed, which I suppose is why some of these things are hanging on. But I think I think the dark clouds are forming. The problem with this is that timing it is always going to be a problem, because asset prices don't necessarily reflect what's really going on, and really what we're waiting for is exactly what I'm saying. You know, what is the straw that's going to break the camel's back? Because there's so much now. It's literally kind of holding bales and bales and bales of hay on its between its humps right now, and still kind of managing to trudge forward. But I don't think it's going to be much before we get what could be quite a significant collapse. You know, when I look at this, if I bring in my charts and we see what and I'll show you what I'm looking at. But the fact that we had
actually, I'll get you when you've done that to put up a Euro Aussie chart too, and we'll have a chat about that.
Okay, cool.
Response to Paul's question.
I'll be relatively fast. I mean, this is the situation, and this is where I think we've got a few levels to watch out for. So this is the Nasdaq right now, Nasdaq 100, and we've got this trend line there. Now that's just on a. Hold on, what we need. So let's have a look at the FTSE. Now this was going to be my trade, the FTSE, and I might still trade this. Where I want it is under that level. And if this does go under that level, then I will trade it. It's got a this is a 15-minute chart, so I'm looking at a 15-minute bar. But this just looks like it's kind of ready to roll to the downside. If but there are levels now. If we look at this along here, there's definitely a level along here. There's a horizontal level that we're currently at. We've got these bars which are suggesting that it's finding it tough to get through here, but there is just a little sneaky level just above, and there's another one just above. And this is where, technically speaking, we are really just at the first point. We're at the first point of rejection here, and it's worth trying it. It's worth trying to take this on. So I'm attempting to take this on to the downside, but I haven't had anything which suggests we should go short. The question for the FTSE specifically, because it's as I always say, it's much more aligned to the business cycle. The business cycle globally is weakening, which would suggest that we get FTSE downside. But OPEC, two of the biggest companies in the FTSE are Shell and BP, and because it's kind of made up, and there's lots of other commodities and stuff, but Shell and BP are kind of two of the main players, and the reason they're important is that OPEC are bringing supply off and out of the market. So when oil goes up, that's one factor that will continue to keep the FTSE 100 buoyed, and that's what we've got going on right now. We've got this FTSE 100 which is buoyed, but there might be a particular point where recession comes into play and the supply doesn't matter because the demand just drops off. People just haven't got the wherewithal or the ability to kind of go and overpay for energy, and they kind of either look somewhere else or they stop doing certain things that they were doing before. That is going to affect the FTSE 100, but we haven't got that yet. So what is going to be the thing that starts to push this over? Retail sales later on might give us a bit of a hint, because yesterday's inflation data wasn't particularly strong, wasn't particularly good for either the FTSE or the US markets either. GDP was weak from the UK. We had core CPI and CPI numbers, all of them rising a little bit. Even the core number kind of came up a little bit. All of them were rising a little bit. But then we had the EIA report, so the refinery crude kind of report, and they were basically sort of saying that there is going to be a lack of supply to the market. So there is a little bit of a dynamic going on, which doesn't really sort of matter about the inflation picture when you kind of get companies able to make profit just because they can put the price of something that is sold on really as part of the FTSE up. Makes it difficult, mate. So this level is one of interest, but I would still look here, and I would still look here as well. If this can't get, if this does go beyond here, I would still look to short. But overall, I think the market is probably near a turning point. If we look at the S&P really quickly as well, here's the S&P week on week. This has also got something similar. Potential for a reversal signal here. Chart pattern wise, you got that, we got that, we got that. So potentially we've got a head and shoulders pattern here. So we may well be at the turning point, but it's possible that this just has one more push, and this is the area that we should be looking. But then again, I'm going to be looking to go short at that point. I just don't see the market being able to sustain itself. I really don't. When we think about bubbles, this bubble seems the most odd out of all of them. Why would anybody that is telling a fund to put their money somewhere, why would they go for equities when treasuries pay better interest rates? It doesn't make any sense. And when you've got, just that's one side of it. So you got treasuries that pay better interest rates, so a better yield than the equities can do, and you've got a situation where global growth is weakening. There's sort of, there's always sort of tensions with China, but China's kind of come out and put some further pressure on Apple, which is one of the biggest companies in the S&P, if not the biggest. So there's lots of little bits of evidence which is suggesting that this market is going to turn. But at this point, We just don't know what it is going to be that really, pushes it hard to the downside. Even if the Fed seem like they're going to pause, I still wouldn't. It still doesn't make sense to me why this would continue to go higher. At 3.7% inflation, they're not coming down. They're not going to reduce the interest rate. But we see time and time again, news comes out and is bad, and market participants buy up indexes because they think, well, we're going to get some monetary policy which is going to give us some easing. But how can they do that with inflation where it is? Or if their claim is true, which is that they are going to fight inflation, how can they possibly be lowering interest rates? And they may not put them up, but they could keep them here for a year. And that's a year that you've got your money in an equity, which is potentially in a bubble scenario, which is going to drop, rather than getting 5 to 6% from a risk-free treasury bill.
Yep.
So I think it's coming down, mate. But I don't know why. And just back to your question with the pound, same deal. That the information coming from the UK is poor, and that would suggest that we're going to get some pound weakness. But you've got this kind of dynamic where on the other side of it, inflation's so high. Even though Bailey said we're near the peak, I think they have to be near the peak because the economic situation is so weak. And actually, that will fix the inflation scenario anyway. But they can't really start lowering interest rates. But will they pause? And if they pause, I think the pound does start to come down, particularly if the economic situation continues. So the pound's coming down, in my opinion. It's probably going to come down hard. Looks good against the yen, but timing it is tough because I think we may be at that turning point, and we might be flushing out some of the buyers still.
Yeah, I'll have a look at the pound yen chart a little bit later. But let's go with Euro Aussie to answer Paul's question. Your Euro Aussie chart.
Yeah, you want to do it?
Yeah, sure.
Just so you got the lines. Yeah,
Okay.
Saudi's cut all production, Danny. Exactly.
Happened then? Nothing. Righto. Let me put up a new chart because I haven't actually got one drawn up, but that's easy enough to do. There we go. So let's talk macro. And this has been on a bit of a tear for what? Year and a half? A little bit more maybe, off that double bottom. Some important lines to put in here. There's one. And probably that's the most important one at the moment, where you can see it was support here briefly, or resistance all the way through here. So that's the nearest proximity to price. And I think that will do just for now. There's a few levels underneath. But it would appear, to my mind, that we have got a beautiful false break of that level. Looks fantastic. The boss of this shebang is this double bottom, or inverted head and shoulders, if you like. Broke the neckline, tested it almost. Gee, this is a beautiful technical chart, this. And then took off again. But, as I said, we are now at this very, very strong level. And it looks, to my mind, that we have broken it, come back underneath it, and retested it. So I've got a short bias at the moment. If I go to the daily chart, would I be prepared to trade that? I think I would. Had I, I'd be in a world of pain at the moment. But this looks like a beautiful setup to me. I'd be inclined to think about a short underneath this week's candle. But let's see how that plays out. What you've got here is a complete mess, yet you've got a very stable area here of support, which, of course, is this month's monthly pivot. Gap down today is interesting, but look at this. Reject, 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 reject. Why is it rejecting that level? That's why. Okay, so it's got some work to do to get through there. 166.40-ish. So the way I would play that is play the range for now till it gets back up to here. If I'm really lucky, price will give me an opportunity to play a false break of resistance once again, this time off a trade line. So back up to this, test it again, top of the range, back underneath it, retest it, give me an entry here where I can take some profit at that level in case it doesn't go through it. So that would be my take on Euro Aussie at the moment, but I can't sell it here because of that support level. And I'm buyer's short, so it's tough to buy as well. So that's about where I'm at, Paul P. I'm a bear, but I'm not a bear at this level. Ash, what are your thoughts?
Yeah, I'm the same as you actually. When I kind of look at this, I will bring in my chart on the Euro Aussie. The ECB's meeting today kind of makes this tough to kind of do too much with. But
it
I'm the
might
same.
set it up nicely for us.
Well, it might do, and it's going to be about timing. I mean, that's only a few hours away. So this is my level of support, and we've seen sellers come in, buyers come back up again. Sellers come in, buyers come in, sellers come in, buyers come in. So at this stage, this is a buy zone. Right now we haven't had a closing bar under 1.6681. On my particular broker anyway. So this is a buy zone. But if we're bearish the euro, it would make it a very difficult proposition to buy. I wouldn't be that keen on it whatsoever, but I'd be the same as you. I'd be looking along this trend line. If I wanted to short this, I probably wouldn't short it. And this is where the ECB meeting really kind of comes into play. I would short it happily if it was up here before the meeting. But if it gets up there after the meeting, and the reason it's got up there is because they've raised interest rates, I wouldn't touch it. So it really does depend on where it is, what's been said, I suppose, what the action is, and then I take it on from that particular point. Not to say that it doesn't go down from here, but this price for me is just not attractive. We're right on a level of support here, and you're asking it to go down. And you're asking it to go down before an ECB meeting as well. What's this trend line suggesting? Yeah, see, this trend line sort of says the same thing. Look at that sweet spot right there, and that's tomorrow. So that there would be a sweet spot on this potentially tomorrow. It might even be today, but it looks like it's the absolute kind of cross, and these very rarely work out. But the cross is really kind of coming in for tomorrow. So ECB might come out, pause interest rates, say something relatively benign, and then we get a little bit of a rally in the Euro Aussie. And then if it gets up there, then I'd be really interested. But until it points at that level, then for me there's no short. We could go and have a look at these and see what these kind of the price action on the 4-hourly suggesting. And the price action on the 4-hourly suggesting it the same thing. It's just another hole down here. There's the
it's just a place where it's not impossible. Nothing's impossible. Depends on your method of getting in the market. But for me, it's impossible to short here.
Oh yeah, for same mate. I mean, it's too dangerous with I think what this is really showing us at this stage is that speculators aren't willing to sell this off before the meeting. That's what it suggests. So that means you'll be trading, if you're going to be sort of trading short at this particular point, you're trading short before the news, and people have already said, traders have already said, we are not going beyond this level before that news comes out. That's what this is telling me. There's a few dips here on not that far back really for the week. This has come down, didn't break through. Come down, didn't break through, and then as recently as yesterday, the same things happened. So this is actually suggesting that we're much more likely to go up before the meeting than down.
Look, to me, it appears that they're happy to sell it off to a point.
Yeah.
and there it
Yeah.
ends,
Yeah,
as you say,
exactly.
until the
Yeah.
meeting decides. Yeah.
Yeah, because anybody that's kind of got a short on up here, they'll take some profit and leave something on the table, and they're quite happy because they're just thinking, well, I've got a free trade if this breaks through. But they're
Yep.
probably not going to get aggressive down here. You know, they're probably quite happy to sort of then now see what happens. As long as they've got in around these areas here, then the chance of them getting taken out looks pretty remote at this particular stage. But if they are going to get taken out, then they're going to get taken out for good reason, and that's probably because the euro is going to rally to the upside, and nobody's going to be bothered about that. If you're wrong when you've got a decent price, it's not that painful in many respects, because you can go in, as I say, at break even and everything's fine. But yeah, so now I would intraday, if I was really forced, I'd be looking to go long on the Euro Aussie, but that wouldn't be my preferred state, because what I prefer is that it does go long without me, gets us up here, and then there's some sort of decision which is relatively dovish, I suppose. Then we can start looking to see it come off again.
Yep. There you go, Paul P. That's pretty much where we're at. Short term, possible if you want to buy it and got a good reason. Medium term, bearish me.
Yeah, same. Another tricky one though, isn't it? Because actually, some of the numbers from Australia have been pretty good. We had some unemployment data today, which was again sort of showing that the labour market continues to be tight. But the kind of global picture does not suggest that we should be looking at going long Aussie. But the euro is even worse, and I suppose that's always what you're kind of playing. You know, I'd love to trade the pound yen short, but it's really difficult. It's a really difficult trade to take on. I like that. Look at this. I mean, that's a lower low. There's a lower high, equal low. So now the information starts getting really messy. But we got a lower high here. There's nothing around here. So all of a sudden, where it was starting to look like, okay, we've got something that we can grab onto, this whole area becomes really difficult because of these lows here. This point here.
I've got an interesting take on this one. When you're done, I'll show you what I've got.
So that makes it technically difficult to short. That makes it, I suppose, even harder, because you've kind of got a level which is right on top of that. And so far on the 4 hour, it's actually held. So this looks like upside. And if it looks like upside, then I'd be much more interested to say, well, fine. If the market is effectively suggesting this really kind of difficult looking range, because we have had a few dips below it, but we've sort of grabbed back inside it. If we're suggesting a difficult range, then I'd prefer to sell it up here and then see if we actually do collapse. But trying to sell it down here when there's just no trend, there's no lower lows really, no significant lower lows, no confident lower lows, then this is just a really scruffy trend, or it's a scruffy range. And I'd prefer to look at it as a range and say, well, fine, well, I'll short it up here then. Rather than sort of worrying about it down here. And that's the same sort of thing really with the euro. This is just a really scruffy range. It's not trending, is it? It's like there's a hold, there's a lower low, great. Lower high, questionable because of that, but fine. Then we just get this hold here. Big problem, big problem. If that had gone through somewhere there, and then we were looking at this same price having come back, then you've got to trade to the downside. But at this stage, there's nothing. So you're going, okay, fine. Well, then we're in this kind of we're in a range then. So really, I want to sell it at the top of the range. If I'm bearish, I don't want to sell it at the bottom of the range. Yeah, go on, mate. So what are you going to say about the pound yen?
Yeah, look, it's so similar to what we discussed on Euro Aussie in terms of what you can do now versus what is very difficult to do now. And my take on this is that's the structure I've got, and I think it's looking pretty good to me for a buy if this continues to be bearish today. I'd be looking to buy that tomorrow and trading it up to here.
Yeah, which
Not
would
on
be
the,
my sell zone.
yes, 100%.
Mm.
The reason I like that level so much is because it's pretty much a bit of a cloud, but that level there looks particularly strong to me.
Yeah.
And same old for me. We've broken it, consolidated below it. We've come back above it. And if today's bar is bearish, then yes, I'd like to buy it. But yeah, only up to here. I agree 100%. I don't think this is, and given what we've just said about the pound, I'd like, and look, if the yen can actually get a toehold and the BOJ actually does do what they're insinuating that they're going to do, and that is get out of negative interest rates, then this becomes very attractive. Weak pound, I hesitate to say strong yen, but strengthening yen, let me put it that way. So this does become attractive as a sell up here somewhere.
Yeah, and it's almost that the yen strengthens by default, doesn't it? Because the pound weakens. I think it's not so much the yen strengthens, but the yen stays flat, but the pound weakens. So then you kind of get this retracement. And also, you know, if we are kind of getting concerned about the global picture, the yen tends to strengthen on that in kind of environment as well. So regardless, really, of the yen's fundamentals. It's going to be a play against just about everything else that is going to get affected by a lack of growth, economic growth. So that's where I think the yen steps up and steps into the view and something that we could possibly look to trade.
Is the pound then the best to trade it against, or is there something weaker on the horizon?
Like it, mate. I like it. I mean, do you know? I wouldn't be adverse to the euro either. I think the euro yen also looks like a decent short as well.
In the same thing for different reasons. I've got this in a buy up to here as well because we've got a box range here.
Yeah, it's a tricky one, isn't it? It's a tricky one. I mean, the only thing that I would sort of say about this one is that we have met some resistance up here where we are, and yesterday's bar actually.
Yes, there's a tighter box in there, isn't there? Really,
there is. I think that the big problem is that if you kind of get your horizontal line on 157.90. Then all we've really done over the last intraday period is tested that level and rejected that level. So, you know, there's if you look on a 4 hour or a 1 hour, that's when it kind of, you know, starts to that 157.90 sort of looks like a potential test area. Looks like a half decent horizontal line, you know, extrapolating right the way across, which does actually support your argument that maybe this is going to go higher before it goes lower. And I'd make you right. I think shorting at the top end, shorting where we are, I wouldn't be adverse to that. You know, shorting where we are, or maybe getting to at least the top of that that white part of the area. That wouldn't be too bad at all to try and take a short from. But I think you'd have to accept that there's a chance it goes right to the top of the pink, and get out if it doesn't quite shape up, and then try and short again on the pink. So I like euro short against the yen, and I like pound short against the yen. But this one, my problem with any yen pair is that nothing relies on timing more than shorting anything against the yen. Because you can't really hold it overnight unless you're already in profit. You know, of course you can, but I would not want to. I would not want to hold this overnight unless I was already in profit, because the swaps kill you. And before you know it, you can kind of get taken out purely because of the swap line, you know, and things like that. So you've got to be, you're never going to be 100% sure, but you've got to be pretty confident you got to trade on a yen short, I think. But in you know, unquestionably, mate, I think those that are confident, especially if they're the big guns, if they get confident that the yen goes long and you short the pound or the euro, it's going to tank. They're going to tank because they've got so far to go. Yeah. So it's not to kind of put anybody off taking a yen pair short, but you want to be comfortable. You want to be really comfortable and make sure that you've got an exit strategy that if you're wrong, that you accept it and you clear out of it, relatively quickly. That's the way I kind of I judge kind of trades against the yen.
Interesting where dollar yen is.
Yeah,
very nearly there, isn't it?
Given the picture, given the kind of the technical picture and fundamental picture, then the yen is if you're a currency trader, if you're an index trader, then you don't worry about the yen. You just short the Nasdaq or short the FTSE, and certainly if you short the FTSE, you get paid positive swap, so you're not worried about that. So if the yen is going to strengthen because of global collapse, then the indexes will collapse. They'll come down. So if you're an index trader, you're not worried. But if you're not an index trader, then of course putting the yen in as the yen as the buy and whatever else it is against as the sell becomes something that a way that you can play that global negativity. But then you're looking at the Aussie yen as well and all that sort of stuff. And the Aussie yen's the same. It's attempted to get through a horizontal line, and it hasn't been able to do it. So it's another one that is suggesting that there is some genuine interest in the yen at the current level. But right back to the start of the show, I just don't know what's going to break investors' confidence, because I think there's enough information now to say these markets should probably be moving lower. And some of them are a rate of knots, and yet they're holding on because we're just sort of seeing these kind of consistent speculative bubbles, really, and I don't really know what else to call it. I think it's a horrible term, actually, bubble, because I think it can be a bit misleading. But in some respects, it's the best way to describe something which is going to pop, and the liquid inside will eventually kind of fall quite quickly to the floor. So I think that's where we are with a lot of this stuff, but just don't know what's going to break it, mate. And while you're trying to discover what's going to break it, you can get stopped out. So I think because of where we are, we might just be better off just sitting on our hands for a little while and seeing if the technical picture gives us something just a bit clearer to trade.
Yeah, there's a lot of in the middle of stuff at the moment, if I can put it that way. Like, this is in the middle of a pennant. A lot of charts are exactly like that. Whatever market structure you can conjure, it appears that we are in the middle of them. And, well, toss a coin, which way to go. And a lot of that, I think, is yet to play out. The interest rate story is yet to play out. We've had, how long now? 18 months or 2 years? 2 years of interest rate rises? Getting close, I suppose.
But getting close, yeah.
Yeah. The housing industry, not so much in the States because they've got permanent or fixed rates for 30 years or something, but all over the world, Australia included, people are coming off fixed interest rates and paying mortgage rates that they never dreamed of, some of them, first-time buyers who stretch themselves. And, so we potentially going to have a credit issue coming up and not too far away. There's pauses for that reason, I think. A lot of different mechanisms going on, wars and God knows what. And, the one thing that I would say at the moment is the last 6 months or so has been relatively calm in terms of what we've experienced in the last 4 or 5 years. And, going back to Brexit, Trump, COVID, all those sorts of things that were just coming at us left, right and centre and moving the market substantially. I think we're now in a relatively calmer world. Okay, the economic situation is not real flash because the world looks like going into global recession. But that said, there'll be ways to trade that. Whereas it was very, very difficult when we were having Brexit, Trump, COVID, and all those sorts of things mixed into a mixing bowl. I think if we've only got one narrative, then it's going to be a whole lot easier to trade. We don't have that at the moment. Of course, there are a couple of narratives, but when we do get to, if we ever get to one narrative, it'll be Trump next again, of course. So probably what I'm saying is about to unfold again. But it seems to me we're in a little bit of a calm before the storm area.
Yeah, agreed. Yeah, I totally agree with you. We seem to have gone. I mean, if you look at that chart, is that a daily?
That is a daily on Aussie yen.
That's a daily. Yeah, I mean, yeah, you're absolutely right. I mean, if you particularly sort of from May, you can see that it just kind of it did move down, but then it's kind of, well, maybe later than May actually. Maybe you're looking at July. It's just kind of like being in this range, and we've really had 3 months where it's just markets have just gone sideways. So we are probably due something. We're due sort of some sort of breakout for a period.
Of course, there are exceptions, and that is the dollar. You know, the dollar's been strong.
Yeah.
And, you know, we can see that. Well, dollar yen, look at dollar yen. My goodness. You know, we're getting towards 1 year of bullish trend.
Yeah.
And we had, 6 months of, not even 1, 2, 3 months of retracement. If you go back further, look at that. Wow.
Yeah. Yeah. The dollar's been the main story, isn't it, over the last few years, just for genuine moves.
Yeah, you bet.
But then you look at the dollar index, and the dollar index has been in a range.
As I do. And we've spoken about this range since back here, right?
Yeah, I mean, for about a year.
Playing this range all that time.
Yeah, for about a year, it just hasn't moved. Really, you know, we're right back to where we started when we sort of really broke down, and actually right back to so right back to September in 2022. We're basically the same price.
Yeah, this shocked me actually. I was very surprised at that, and I can't remember if there was a reason for it, but it did give us another structure to follow. So that's all good. And I think once we get to here, which I can't see not happening, frankly, just a matter of when. I think if that coincides with Fed easing, pausing, can't see them easing, but anyway, if that does coincide with a couple of meetings where the Fed says, okay, we're now not thinking of raising interest rates anymore, then perhaps this does turn over and comes back to fill in our range again.
Yeah, and I suppose this is the thing, you know, for everybody kind of in the room, some of these markets just look really, you know, very, very difficult to trade. And just to kind of fill you with a little bit of hope that you're not looking at the charts and sort of just with complete confusion and you think you're never going to understand it. We're all like that at the minute. You know, we're all sort of in this situation where the markets and the charts are just stuck. And when they're stuck, it's very, very difficult to make a decision. But the difference really with sort of, the way that we will treat it and the way that somebody new will treat it, and, you know, I'm talking about the experienced traders in the room as well, is that we'll wait and allow the kind of picture to get a little bit clearer, which it will get clearer. We always get these periods where you just don't really know, sort of, or in fact, you never really know what's going to happen. But the speculative clarity is just more clouded than other times, you know. And there's other times that you'll look at the market and it looks clear, and you think, oh, I've got this stuff now, and then you get a point where it gets scruffed, and you feel, oh, I don't understand it. But it's not that you don't understand it; it's just that the markets have changed, and we're just waiting for the dynamic to change back into being something a little bit clearer again, which it inevitably does. So it's really important just to kind of have some patience and be easy on yourself and say, okay, it's not that I don't understand how to trade. It's just I don't understand this particular market, so I'm going to wait until I get something where I do understand it. And if you wait, then you'll save your capital, and then you will be able to kind of stay in the game, which is what this is about. What you don't want to do is attempt to trade something that makes no sense, and then get yourself further and further into deeper and deeper confusion. Because you know, as I say, I don't know if it's the same for you, Jeff, but this market doesn't make a lot of sense to me either. And the only way really I'm dealing with it is making sure that I take very, very small bites to see if I kind of get some follow through in the direction I think it will go. But when it doesn't happen, sit back, wait for the next one. So, you know, I'm not stepping out of the market. I'm just taking smaller chunks, rather than sort of having too much confidence in something which looks like it might be at a turning point.
Yeah, look, exactly right. But you know, to me, there is clarity at the moment. But the clarity is not to trade. The clarity is exactly as you said, to wait. It's perfectly clear to me that, you know, since here, it's been, and that's 8 weeks ago, it's perfectly clear to me that unless I can get into a buying position here, I've got to wait till price gets to here before I can look to trade it. Now, there's been opportunities on the currencies against the dollar, and indeed the indices against the dollar, to trade that. Gold in particular, I think, has been, you know, very, very nice. So there are opportunities. We both agreed on things like CAD versus the Swissy, right? And the reason that we could see that was because it was perfectly clear. You know, it's perfectly clear down here that this is going to bounce. Yeah. You know, this is not just a casual low. This is an all-time low. Not been here before. So when that happens, just like it did here, just like it did here, just like it did here, every time it creates a new low, it's going to bounce off it. There's going to be a response from the buyers. And that's exactly what we've been looking for here. We've been looking for this for a long time. It's not just something that's turned up in the last few days. And again, that goes to that wait scenario. And we waited and we waited and we waited. And eventually you got a setup. I got a completely different setup, but I got a setup as well. Mine came, for those of you new in the room, I've been speaking about false breaks all day. Then that's exactly what a false break looks like. So back above, retest it, and there's your entry point. I think I either got slipped or, oh no, I waited for the next one, didn't I? That's right. Waited for the next one to come back after that big bar there. And you got that bar, Ash.
Yes.
But, you know, there are instances and currency pairs and asset classes and things that scream at you every now and then that you got to pay attention. Now, we had to pay attention for half a year nearly. July, well, me in particular, I've been waiting since here to actually get into this move. Now it may end here, but it doesn't matter. We've made a chunk of change in here. Yeah. I have made a chunk of change in here. I've got my stop loss at a safe place and put some money in the bank. If this does go, you know, minimum, I've got it up to here. If we're fortunate, then I've got it up to here. That's 13,000 pips away. 13,000? Yes. 1,300, sorry.
1,300, yeah.
For a risk of, I think it was 40. Could be wrong.
Yeah.
That's not too dusty.
No, you're right, mate. There are these kind of we you know, that there's, I suppose they're just few and far between, aren't they? You know, maybe that's what it is that these opportunities at this particular point see few and far between. This was a really nice one. Who knows what happens next on this one? It might stop out here.
Absolutely.
It might go to the top of the range. You know, but yeah, there are a few. I mean, gold's a decent sort of example of one of those things where actually gold's been on the move, I suppose. But gold's another tricky one. You look at that on a daily. If the dollar is going to weaken, then we're getting very close to a buy level with gold.
We are. I found gold particularly since I've started following it, which is not long ago. I've found it actually pretty technically correct. It works the way I look at the market, or the way I look at a chart. It works fairly well. I'm more than happy to keep trading gold.
Yeah. Well, you look on the weekly chart, this looks like it's coming down, doesn't it? I mean, it looks like, okay, we might well have a hold coming soon, but and actually the last low was a bit maybe sort of, it could be a bit misleading. It might actually suggest that we've bottomed out, possibly, but it has struggled to get through the highs. So it is still suggesting that there could maybe sort of another stretch down again with gold.
Another false.
But I think that's the thing. I think that's what I'm talking about. We're getting a lot of markets which are doing one of the two. They're either giving us a lower high, but not a lower low, or giving us a higher low, but not a higher high.
Yeah.
And that's where the market sort of does become trickier. It just becomes a much trickier kind of market. It's not behaving for a trend follower. It's a very difficult market to trade.
Yeah, well, fortunately, I've never been able to trade trends, or fortunately or not fortunately. Actually, I'd like to be able to trade trends. It's just not my thing, because I'm on the other side all the time. I'd much rather be looking at lemmings jump over the cliff than jumping over the cliff with them. So that's kind of where I'm at.
Yeah, it's interesting, mate, isn't it? Because I remember at the start of this year, it was quite frustrating for you, wasn't it? Because everything was trending. It was like everything was going. But then I think we discussed it about 3 months ago, saying actually you might be about to hit a pretty good phase, because it's it looks like
we did.
maybe that maybe that
has
sort of environment. And that's the point about environment, isn't it? And that's the point about approach. If your approach isn't working, it's not because you're confused necessarily. It could be that the market's confused and it's not equal to what the way that you trade and the way that you see the market. We have been in a particularly good environment for range traders for over the last 3 months, maybe longer. But at the start of the year, it was all about the trend traders. So a trend trader just needs it to flip back again. Whether it happens, we just don't know.
Well,
it will eventually.
It will, but we just don't know when. Yeah.
Yeah, we just don't know when. Yeah. So
I know when to go, and we're getting very close to that. Guys, thank you for your questions, by the way. Thank you for those who have been in the room for the first time. It's been nice to have you. You were pretty quiet, the new people, and that's perfectly understandable. But I hope you got something out of what Ash and I have been talking about. And next time you come in the room, hopefully that's on Monday, please feel free to ask some questions or offer some ideas. That's better still. You could give us a trade or two. We'd be happy with that.
Yeah, that'd be brilliant.
In the meantime, in between time, it's time to POQ. Thanks for being my trading buddy, Ash.
You too, mate.
And thank you all for being our trading buddies. We hope to see you next Monday at the very same time. Have a great weekend. Bye-bye for now. See ya.